We have Rohit Agarwal, who's a Senior Executive Vice President at Kotak Mahindra, joining us on the show. A very good morning to you, Rohit. Thank you so much for joining us. And special discussion today is going to be on the financial sector. A lot has been happening in that space. You have a credit slowdown that has impacted the space. You also have the fact that rates are at an elevated level. That sort of has actually impacted lending as well. A lot of confluence of factors that have impacted financial space, especially in run-up to budget. What should one watch out for?
Hi, good morning. As you rightly said, rates have been elevated. At the same time, the most cognizant thing that we have to keep in mind is that credit growth has slowed down to about 11 odd percent, right? And that is one of the biggest reasons that the economy is also slowing down. We cannot have an economy where credit growth slows down to 10, 11% and the economy grows at 6.5, 7%, right? But if you just look at what's starting to happen is there was a deficit of liquidity of about 3 lakh crores. And just recently, we seem to see that there are signs of the central bank trying to do something about it and trying to inject liquidity. Till now, we have seen that actually this sector has underperformed in the last 1 year or so, rightly so, because there are two aspects to it. The government part and the monetary part, which is the central bank. The government, which decides the budget, is likely to maintain the fiscal deficit and also the glide path that they had directed to, which is good from a fiscal consolidation point of view. But for the financial space, it is always necessary to have monetary as well as fiscal going hand in hand for the sector to do well, because that is the heart of the economy. And we believe that if the government does deliver on the expectations of maintaining the fiscal glide path, the central bank will also help or make its part felt by doing what the market or the economy needs on the monetary side, which is to start some kind of easing. In the last 12 months or so, or actually 6 quarters, if we saw, three segments of the economy where at least the central bank was trying to tighten in one way or the other was the MFI space, the unsecured personal loan space, and the credit card space, where there was a lot of growth. Growth was very strong, and hence the early delinquency buckets were showing signs of stress. And rightly, the central bank intervened and in some way or the other ensured that the credit growth in those segments slows down. Now, we believe that we are getting to a point where, having slowed down the growth in those sectors, the central bank, after also in consultation with the government where they are doing their bit, might come to an opinion that much has been done on that side and some easing may start. As you start to see some easing on all of these segments, I think the credit flow to the economy will start, because we
Absolutely.
believe that the credit growth today is not a demand problem, but a supply problem.
Right.
And that supply is also to do with you or the central bank wanting to give that supply or not. And hence, when they get comfortable, of course, keeping inflation
Point.
in mind, I think things will get better on
Exactly.
the credit side and also on the GDP side then.
Absolutely. Actually, Rohit, given the fact that you will need a two-pronged action when you talk about the financial space. One is when you talk about the budget. The other one is when you talk about the monetary policy, which is actually next week itself. And everyone's penciling or hoping that this time around there would be some sort of an easing taking place, given the fact that you had the RBI also that actually put in some liquidity measures earlier this week as well. But talking particularly about budget, there are certain aspects that you need to watch out for. One, when you talk about financial space, is pretty vast. So I want to understand, when you talk about financial space, what are you looking at? Where should one place their bet in? Because when you talk about financials, you also have the PSU space, you have the private space, you have the banks, you have the NBFCs. You also now have insurance. And also when you talk about all of these segments, you will also talk about the capital marketplace, right?
Yeah. So if you look at the financials as a basket, uh, budget or no budget, the expectation is that with a possibly decent budget where fiscal consolidation glide path is adhered to, there is, of course, likelihood of the beginning of a rate cut cycle. We, however, believe that the rate cut cycle is not going to be a deep one and is going to be a shallow one or a measured one. At the same time, when there is a rate cut cycle that happens, the people who have a more fixed rate book tend to benefit because their costs go down, but their lending rates do not go down as much because they have a fixed rate book. Hence, people who have a higher fixed rate book will benefit mostly on the NBFC side. They will stand to benefit as and when the rate cycle begins. At the same time, between the private banks and the PSU banks, if you look around today, the problem sectors which I mentioned, which were MFI, unsecured personal loans, credit card to some extent, MSME, and some SME, the exposures of this is not too much on the PSU bank side. At the same time, they have also corrected with the market correction, and hence some of the PSU banks which are available at 0.5 to 0.7x are ripe for some kind of a rally. Simply because if you look at some of the numbers that they have declared in this quarter itself, and some of them are obviously yet to declare, the stress on asset quality is not there as much on the PSU bank side as it is on the private bank side. That's simply because on the unsecured retail or on the unsecured side, the private banks are more active. And hence, you have seen higher delinquencies and asset quality issues, and also slowing down in the same process. So PSU banks could do well in the near term simply because they do not have asset quality concerns. At the same time, they are also seeing asset recovery, which means they are seeing recovery from return of accounts, and hence credit costs for a lot of PSU banks is almost negligible, and hence the reported return on assets ROAs will again be pretty decent. Again, they are not going to trade at 2 times or 3 times book, but some of the PSU banks which are trading at 0.6, 0.7 may go back to 1 time book, and then you can book your profits. So between private and PSU might do well. NBFCs, as I said, the ones which have a higher fixed rate book, that is mostly on the vehicle side in general because the lending is a fixed rate lending, but the borrowing is obviously not fixed. They will stand to benefit. Coming to the capital marketplace, now the capital marketplace again has been a very divided street itself. The exchanges have done well, whereas some of the other capital marketplace, which are brokers, have not done well. That's because the definition or the revenue and the cost drivers are very different. For exchanges, the revenue is premium that is collected on the options, whereas cost is on notional turnover. After all the changes that SEBI or the government collectively made on the trading in derivatives, it's the exchanges will have benefited at the expense of brokers. So within the capital marketplace, the exchanges tend to benefit more in the current scenario versus the brokers, is what I would put it.
So that's the take coming in when you talk about the financials play and which side of the fence which Rohit is actually betting on or liking in the entire financial space. And remember, it's a vast space. If not only budget, you also the monetary policy also that will impact most of these plays. So watch out for the financial space in particular. Thank you so much, Rohit, for taking the time out today actually. And I know it's a truncated one because we have a lot of managements lined up on the show. But thank you so much for taking us through the financial space in a very special budget and your sector.
If you like this video, then like, share and subscribe to ET Now.